Hello everyone, welcome to the Elliott Wave Forex.com YouTube channel. Today is February 15 and chart of the day for today is gold, 60 minutes time frame here. Now this is interesting in the sense that typically when I do the chart of the day, I will tell you what I think is the clearest sort of path, right? I will mention, short term is the clearest, medium term maybe there are multiple different paths, something like that, right? Now in terms of gold right now, honestly, there is no clear path right now, and there's no clearest path that is high probability is what I'm talking about, in even in the shorter cycle, and I'm going to explain why that is. But for now, based on the chart here, and we are still calling for another leg down for now, as long as it stays below 2065, right? So you can see we ended with X here, and then now that means we are within the Y leg, and the Y leg subdivides into a corrective structure, and we ended this with W of Y here. This is your W of Y in the minor degree here, which is in red color. And then we're now doing the X rally, X of Y, and then another leg down to finish Y of Y, and then that will finish the entire correction because WXY is a corrective pattern. And then from there we can then start to rally to another high, or at least in 3 ways, right? So I think if you look at the 1 hour time frame, the expectation is for the downside in gold. Again, this is the more significant level for the view that we're going to extend on the downside. Okay, now let me zoom out to the medium and to the little bit larger cycle, and just give you my 2 cents but what I think of gold, right? And I'm going to start, as always, what is the most important for me is the largest time frame, which is the daily and the weekly. Now if I go to the daily time frame, now we have all the counts here, by the way, in the larger time frame in our service, so you can always check our service, and we have 14 days trial if you like, but I will give you my 2 cents here. Now as you all are aware, gold in December last year, it made all-time high, right? It made all-time high, which is around 2,150. Now generally speaking, you know, when it made all-time high, then that means you cannot have a corrective rally into a new all-time high, right? That doesn't make any sense. So then that means the rally has to be impulsive, the move higher has to be impulsive, the trend has to be bullish in order to make an all-time high. Now if you look at the daily time frame here, what is very clear here is that the last significant low from the daily time frame is right here, right, in October last year. That one was the last significant low before it rallied into a new all-time high. Now you can see the rally here without any question or argument. This rally is clearly 3 waves, right? Clearly 3 waves. Now remember what I said about you cannot make a new all-time high in a corrective structure, right? This is the last significant low. From the last significant low, I only see a 3 waves, right? And then after that, we don't have any extension higher, we don't have any continuation, and we kind of going sideways here for, I mean, since last year technically we've been sideways for for more than 2 months, right? For more than 2 months. So what is the conclusion? The conclusion is we cannot have a huge mega top here at the last high when it was clearly only 3 waves. Nothing impulsive ended in 3 waves, guys. So what are the choices? What about if we actually see gold continue to extend lower? So what are the options, right? And just basically, let's do a hypothetical scenario here. If let's say if we see gold continues to go down, so first of all, okay, conclusion first, gold still bullish. Why? Because we made all-time high, and we cannot be ending make a top in a 3 waves. Conclusion, we will at some point break above 2000, whatever that high is. So that's a very important, like sort of the biggest kind of overall view about gold. Now, shorter cycle, medium term, there's a lot of possibilities, a lot of oscillations, and so on. But that's something that we're gonna take a look a little bit. Like I said, the short term, medium term, there's no one clearest path. So I will tell you what are the possible options we got. Right? The clearest path at this point is only at the highest of the highest sort of level, which is bullish. At some point, we're gonna break above this. But let's discuss some of the possibilities. Now, because we are not in an impulsive structure, the rally from here is only 3 waves and then seems kind of like sideways and even have a chance to extend lower, right? At this point, right? Now, if it does break below this low, then obviously you have to conclude this is really indeed a 3 waves. So how can we make all-time high in a 3 waves? Well, a couple of different options. One possible way is this is a diagonal. So some kind of like wave 1, wave 2, wave 3, wave 4, wave 5, which is in 3, 3, 3, 3, 3. That's one possible option, option number 1. So it still remains bullish in that regards against this low. It doesn't matter what the market is doing. So that option is still bullish against the last significant low. Option number 2, right? Option number 2 is this is the previous high before it made all-time high, right? This is the worst case scenario. We are doing expanded flat. 3 waves down, 3 waves up, and we collapse. Right? We collapse 3, 4, 5 like this. So this 3 in the form of another 5 waves. So 1, 2, 3, 4, 5, ending 3, 4, 5. Option number 2. I don't like that option because I don't like speculating on a flat when market is making all-time high. Again, I think probability wise that is a poor kind of forecast. My personal point of view, based on experience, market makes new high, do not call expanded flat. If I do that, then usually I just insist on what my bias tells me, which is let's say I'm bearish and I don't like it if it makes all-time highs. I say, oh, it's expanded flat. So I don't do that. Market is the king. I adjust based on what the market is doing. Okay, so that's number 2. Number 1, we are doing diagonal from here. Is if it continues to go down. Number 2, doing a flat from here. Notice here, regardless what option is going to be, we're going to eventually break above here because no impulsive structure ended in 3 swing. Remember. But again, as you can see, I mean, even if I show you this or this, because we are talking about daily, that can take months to play out, right? It can take months. In the meantime, if you are trading shorter cycle, you're gonna get into a lot of pain because it is still kind of choppy and sideways in the shorter cycle, right? And again, in the shorter cycle, we're actually calling for more downside. This is the X here at 2065. So basically, let me copy this. This is the X over here around 2065, right here. And so this is your W. So you got some sort of like a possible another kind of like a WXY here in a larger degree with possible breakdown. Now, even in the shorter cycle, it's not in the clearest path. Why? Because if you look at the daily, we technically have not broken below W here, which is the more important low. Again, if you only look at the 1 hour and see nothing else, that's why I always encourage people, guys, look at all time frames. Don't just look at the 1 hour. Don't just look at 15 minutes and try to trade everything in the that's not really a professional way to do it, right? You got to know all the possible paths, guys. It's like a chess. You have multiple different paths. You've got to analyze everything, right? So in the daily, the move down at this point, I'm saying today, it has not been fully validated because it has not broken below below this previous low, whatever you want to call this, right? But I'm saying this previous low here. So until it breaks below here, well, technically, it can do many different things, right? It can do a triangle because it's sideways. It can even rally from here without breaking. So it's just continue to rally like this, right? Then what are you gonna do about it? If it just like this, then it's probably already extending higher, and you have to adjust the count. You cannot call this WX, right? You have to adjust it into impulsive count, right? So the bottom line is we are sideways in the shorter cycle right here. We still need to break below here. Now, if it does break below here, then yes, probability is saying I think we should be extending lower, and it got validation. This view will be validated, the move down, if we can break below here. Now, if it breaks below here, then what will be the next target on the downside? Well, the next target simply you measure from the all-time high to this low. Notice here, I'm not even touching 1 hour, because 1 hour to me doesn't matter, right? A lot of people give so much emphasis on the 1 hour without understanding the structure in the larger degree, right? So here, it will, if it breaks below here, notice here, it's going to extend the next 100%, which this leg is equal to this leg is going to be this area here. Now, whether or not we go to a full 100%, it could, or it may truncate. So as always, the ideal is going to 100%, which is 1915 if it breaks below here, but sometimes it does not. Now, if it does not, most of the time it will end somewhere around 61.8, 76.4, which is about where we are. So there is, okay, if it breaks below here, chances are we may possibly go to 1915, right? If it doesn't go to 1915, then I think it's going to stop breaking below here, maybe somewhere here at 1956, and then starts to rally higher. Okay, so draw a trend line like this, and that will be your bearish trend line. At any point, if gold starts to rally and break above it, then all the move down might be negated. In other words, it may not happen. Remember, the most important thing, the clearest thing here is not, oh, the shorter cycle has to be doing this, has to be doing this and then this, or has to be doing this and this, or has to be a flat like this. The most important clearest path that I want to give you guys is that gold at some point is going to break above here. Why? Because there's no bullish trend that makes all-time high that ended in 3 ways. Now, shorter cycle medium term is extremely ugly right now, and I can see multiple different paths, right? And what we are showing in the 1 hour here right now is basically calling for further downside and eventually break below here, and which has not been validated to begin with. So that's why the arrow is turning down. It's not red. Red means we have a higher probability it's going to happen. This is only turning down in black, which means it's still kind of like 50-50, so to speak, that it may or may not go down, right? And so here again, assuming it breaks down below, then you can target around 1956 to 1915, right? I think this is the area you can be looking for a possible target on the downside, 1956, 1915 if it breaks below here. Now, you might be tempted, okay, well, if it goes down that much, maybe I should short sell it. Well, the thing is that we don't have the confirmation or validation yet, breaking below here. And the other thing is that the clearest path actually is not lower. The clearest path is at some point it's going to break higher, right? It's going to break again to new high, because again, nothing ended in 3 ways in an impulsive structure. So that's the takeaway, guys. I know it's shorter cycle is not the best, but again, chart of the day, we tend to just do everything, not just the one that is clear, right? Also the one that is not clear, but I try my best to give you more context, not just talking about the 1 hour time frame. All right, so that's it today, guys, and I'll see you all again next time, and have a nice one.